Through a financial plan, you're the author of your own story. It is unique to you. It is not generic. It has to address your concerns as well as milestones that you want to achieve. Revisiting the plan on a frequent basis is key. You need to make sure that you've adapted to the different things that are happening in your life, key changes in your family life, changes in terms of your income and employment, and inflows and outflows of cash.
This is the story of Jane and her plan. As a baby, Jane was the apple of her parents' eyes. Jane still remembers her childhood fondly, weekends in the park, playing with toys, and wanting for nothing. Jane's parents loved her and spoiled her. When Jane went off to school, she made friendships that would last a lifetime. She learned how to be independent. Well, most of the time. After graduating, Jane found a job. She was now a responsible adult. Well, for the most part.
For somebody who just started their career, they should be thinking about a number of things. First off, it's an exciting time. They've just got their new job, they've finished school, and they're starting to get income for the first time. But they're probably paying off student loans and other debt payments, and they likely have new costs that are associated with their day-to-day life. This is a time of life that you need to establish good financial discipline early. That is about cash flow and savings. Cash flow is about measuring the inflows and the outflows coming in and out of your household. Savings is about setting up a systematic plan early to get in the right habits to save for your short and long-term goals. Why is it important to invest in your retirement early? Time is on your side when you start early. The power of compound interest and compound returns has a huge impact on the final outcome of that retirement savings plan. The earlier you start, the less you need to save to achieve your goals because you've got the power of that compounding working for you.
Jane enjoyed her work, bonding with colleagues in their common struggle to excel at their craft. Jane eventually left home to be closer to her friends' work and to gain true independence. It was a happy time for Jane. She planned her days and she planned her nights, but she couldn't plan for everything.
There are a number of things that you need to take into consideration when entering into a long-term relationship. Tax consequences and income splitting opportunities. Making sure you've taken care of each other through insurance and estate planning processes. And of course, making sure you really prioritize your goals and make sure you're both in agreement on what those goals are.
Jane got married and she and her husband planned for a house. In the right neighborhood, by the right parks, and by the right schools. It was a struggle, but it became their dream home. And soon after, another dream came true. On weekends, they returned to the park from Jane's childhood, playing with toys and creating new fond memories. And once again, Jane wanted for nothing, except a little more sleep.
So what is the impact of children entering the equation? There's a number of things you need to think about. Primarily, your concerns are going to be around post-secondary education and ensuring you have the right amount of money saved to help them to get that education. Secondly, your day-to-day cash flow is going to change. The cost of programs and sports and recreation, all of those significantly impact your cash flow, and so you're going to want to take a step back and review what that cash flow impact is on your financial plan.
Time now began to move faster and faster. A family member was added, while others left. The children grew older, as did Jane and her husband. And at this stage, they realized it was time for a new adventure, one they've been planning for a while. Retirement.
Is retirement the final adventure in financial planning? For most people, the answer is no. It's merely moving to the next chapter in your financial story. For most people, the shift goes from saving to spending. Other things to consider are estate planning, providing for your family, and causes that you care about.
Jane's family continued to grow. Her children were now adults and having children of their own. Jane and her husband continued to plan things to do and places to see. But what they enjoyed most was being able to spoil their children and grandchildren and teach them the importance of planning for the future and living for today. This is Jane's story and her plan.
Is it ever too late to develop a financial plan? There's an old saying that the best time to plant an oak tree is 50 years ago and today. The reality is, no matter what stage of life you're in, if you've got goals and objectives, That's when you need a financial plan to help you get to those goals and objectives, regardless of what life stage you're in.
Before you decide to invest, make sure you do your homework and ensure that the investment is aligned to who you are as an investor, including your asset allocation and your tolerance for risk.